What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market. We will also be covering the SoFi stock. And I'm telling you right now, I have some incredible information for you guys. I believe SoFi is going to have an amazing year to finish out this year. We know that there are some bad headlines inside of the market, bringing high quality names like a SoFi down and a dozen others. This is not just SoFi, guys. There's insane inflation, highest in 40 years. There's a war going on and interest rates are being hiked, every single month, okay? That's some pretty bad news, okay? But I believe SoFi is much closer to a breakout than we truly believe, guys. I'm going to give you the bearish price target on SoFi, which is what the bears want to throw out. We're talking about book value. When I think about book value, I think about a company that just reported crappy earnings, has no growth for the full year, and they're just trying to get a price for the equity value inside of the company. That's not SoFi, okay? SoFi is growing rapidly right now. We're talking 40 to 60% growth back-to-back years, okay? I just saw an analyst go on, TV the other day when some of the bank earnings came out and they had bad earnings. They go straight to book value because they're reporting negative growth, okay? I told you guys, JP Morgan and Goldman Sachs, these guys are reporting -5 to -6% growth, okay? Without doing a massive downgrade on the company and, just cutting all the guidance, what do you think they go to keep the stock holding up? They go to book value, okay? We're going to give you the book value on SoFi inside of this video. Guys, that is literally what the company is worth if they had nothing going for them. I'm talking about no growth, flat growth. That's what you're going to be getting in the beginning of this video, okay? The bearish price target for SoFi, okay, the book value, and I'm going to show you how we come to that price target. Now, there's some great news happening right now, okay? Bank of America just reported their earnings. They were solid, but we know they took another hammer with the Russian exposure, and also trading volumes are very low. But guys, SoFi has no Russian exposure. SoFi's not trading any options right now. But guys, guess where their business was strong at? Consumer lending, guys. Lending. That is, 60 to 70% of SoFi's overall business. That's what we want to see heading into these earnings. I think our earnings are going to, overlap these bank earnings, and that could put us in the, driver's seat for the next couple of quarters, okay? I want you to know right now, SoFi is a bank, but even though the banks were green today, they are not pricing us as a bank. They are pricing us as an unprofitable growth stock about to go bankrupt. That's what we're getting priced at right now. But guys, we're going to give you some great news inside of this video. If you enjoy this video, be sure to subscribe to the channel. We will be keeping you updated daily. Be sure to smash the like button and don't forget to drop a comment. I'm going to be commenting back to as many people as I can. Let's get into the video. All right, guys, we got book value. What is book value meaning? In my personal opinion, book value is pretty much your turd value, okay? They're pricing it as nothing, no growth, just what the company has in equity. That's not how you price fintech. That's not how you price the future, okay? Book value is the accounting value of the company's assets, less all claims senior to common equity, such as the company's liabilities. The term book value derives from the accounting practice of recording asset value at the original historical cost in the books, okay? So we're going to look at the liabilities and assets and see what we have in equity right now. That's going to give us a nice solid book value for the stock. All right, so you're going to have to go to page 19 of 24 of the earnings release. This is the unaudited, condensed, consolidated balance sheets. And you can see here we have the assets for the end of the year 2021. I mean, you have a lot of stuff going on here to get your book value, guys. We got cash, restricted cash, servicing rights, property, equipment, goodwill, operating lease agreements, and then you have the liability. So total assets comes to about 9.1 billion in assets. You can see they're up higher than last year, 2020 ending in December. So assets went up a little bit higher. And you have right here liabilities, operating lease liabilities, debt is about 3.9 billion. Residual interest classified as debt, 93 million. So you got total liabilities at about 4.4 billion. Look at this, guys. Total liabilities actually came down as well. So you got assets going up, liabilities coming down. That is, great news for a company that's growing very strong. And if we just scroll down to the bottom, you can see the permanent equity deficit would be a negative. We can see we're in the positive of about 4.3 billion. We'll round this off to about 4.4 billion just to get you that, nasty price target. Pricing in no future growth for SoFi, Galileo growth, Technisys growth. You're not getting any of that. You're just getting equity value right now with assets and liabilities. So you're going to take all the outstanding shares, 910 million, and then you're gonna, put in the total equity value when you get assets and liabilities. I just rounded it off to 4.5 billion to give you guys a, solid price target. And right now we're at about $5, book value, just the equity inside of SoFi, okay? You can see even with those nasty bearish analyst price targets, when you combine the dozen analyst price targets, we're at about $15 price target on tip rank. So guys, you can see there's a big difference from a growth price target and then book value. Because we're in this nasty environment right now, the bears want to get you at book value. That's what the banks are doing right now. They're doing terrible on their earnings. They're showing no growth. They're showing negative growth. So if we were showing those types of earnings, this is what our, lowest price target, in my opinion, should be, about $5. And I just think we are massively oversold from the guidance that we put out, the growth, the deals we made. I just think we're so oversold right now, and we should be getting a huge bounce very soon, guys. I understand we hit new all-time lows under $7 today, but just to show you guys, I mean, this is, the nastiest price target you can get when the bears, comment on book value. And we got some solid news here, some solid buys coming in. This is a Sumitomo Mitsui Trust Holdings Invest, 19.85 million investment in SoFi Technologies, guys. This is a pretty big buy in my personal opinion. I see these, a couple $100,000 buys, all the time on, the Fintel updates. This is a big buy. These are the kind of buys we want to continuously see come in at these levels. And guys, take a look at this. Stocks making the biggest moves midday, Bank of America. And if we just scroll down a little bit and read the update, shares jumped 3.4% after Bank of America reported an earnings beat on Monday. Bank of America topped expectations in the first quarter with earnings of 80 cents, 23.3 billion in revenue, helped by strength in consumer lending, guys. This is exactly what we want to see, okay? SoFi has a lot of its business inside of lending right now. I can't guarantee you that Q3 and Q4 is going to have super strong lending, but I'm telling you right now, I believe Q1 and Q2 are going to be some strong earnings for SoFi, because we don't have that Russian exposure. We don't have this, options trading going on. They saw a slowdown in, trading volumes for Q1. So a lot of good things are going for SoFi right now. Even with that, student loan, pushback, I believe SoFi has priced that into their numbers. We should be getting some strong earnings. If you're talking about, 1.45 billion in revenue by the end of the year, guys, that's 45 to 50% growth. These companies are reporting, negative earnings. You can see here last week, JP Morgan Chase reports 524 million hit from market dislocations caused by Russian sanctions, okay? So this is the time we can get in that driver's seat and get ahead of some of these legacy banks, because, right now SoFi is massively oversold. And if we're reporting strong earnings with strong guidance, strong growth, this could be the time to make up some heavy ground that we sold off since our last earnings, guys. We were literally $13 to $14 a share just 3 months ago on our last earnings. I don't believe, that student loans extension should make us lose 50% of our value. That's my personal opinion. I believe the massive shorting going on inside of this company is what's really hammering us. But like I said, book value right now is about $5 per share. And guys, this information I'm going to provide to you took me a little bit of time to really find. I had to go back over 20 years ago to really get these details and these, earnings filings for Amazon. You got to see this, okay? This is Amazon's net income losses. This is back when Amazon was just losing money nonstop, investing in growth before the company absolutely exploded. Take a look at this. 1998, they lost $124 million. 1999, losses jumped to negative 720 million. The year 2000 jumped to negative 1.4 billion. And then 2001, negative 567 million. 2002, negative 149 million. And you can see here in 2003, they turned their first profit of $35 million. And then 2004, things really started rolling, plus 588 million, guys. I believe right now, SoFi this year, 2022, is at the same exact year of 2002 for Amazon right now. So all this nasty investment stage right here, these 4 years, you already surpassed that, guys. We are going to be turning a profit by the end of next year, a small profit in my personal opinion, because we got that bank charter really starting to kick in right now. As I'm speaking, the bank charter is going to start kicking in to our numbers, guys. It's going to cut down on our costs, and you're going to see that net income loss continue to go down by the end of the year, guys. So in my personal opinion, we are in the 2002, year for Amazon right now for SoFi, guys. You're going to see our first profit happen in 2023. So all this investment growth stage, this is where SoFi was at when they were a private company, investing in growth. I believe SoFi went, public at the perfect time, okay? They're giving you about 1 year of, additional losses before they turn that profit this year. They needed that money from going public to get that bank charter to fund these loans, etc. So we're looking pretty solid in my personal opinion. So just understand Amazon at one point also went from 113 all the way down to $6. And I believe right now our book value is 5. So this is the time to be accumulating because we're going to be turning a profit next year when that bank charter starts to kick in. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you. SoFi right now is a massively shorted company. We're talking over 130 to 140 million shares short, 19 to 20% short interest, continuing for the past 6 months, even though we beat earnings the last, 2 quarters. And then we also have, our student loans, business getting pushed out. That's going to cause massive profitability, heading into 2023 when it comes back. So you just have to remain patient and understand this is time to accumulate. We are at extreme levels. SoFi has been punished, beyond, what the company has done. The company has been growing very strong, reported guidance increase this year for 45%. This is time to be buying, guys. You can see Amazon had massive losses for the first, 5 to 6 years of the company. I mean, the losses were almost tripled SoFi at one point when they were at negative 1.4 billion in revenue losses. So last year we reported about, negative 500 million, but I believe next year is going to be our profitable year. So as you can see, guys, we are looking extremely solid to get out of this nasty downtrend. Our book value is right around $5, and we are not growing like these banks. We are growing rapidly. They are the ones reporting declining growth. And that sector today, banks, financials, was green today. We are not going to be classified as a bank until we turn profitable because there's so many bears out there that just don't like the innovation, the growth, for fintech. So you need to remain patient and understand this is the time to buy. My name is Kyle. Hope you have a great day.